Hey everyone, this is Dr. Jeff Anzalone with debtfreedr.com and looking really forward to having a little conversation today with Dr. Alka, that she is a practicing radiologist in the Tampa area turned real estate investor. So welcome. Thanks for joining me today.
Hey Jeff, it's great to be here. Thank you so much for letting me be part of your tribe.
Yeah. So tell me how the weather is in sunny. It looks like it's sunny behind you in Florida.
Oh yeah, it's always sunny or mostly sunny and gorgeous. Yeah, we have hot summer months, but I would take that, over snow any
Yeah,
day.
absolutely. So I wanted to ask you. I know that you're still practicing as a radiologist, but so maybe let's go back a little bit and talk about how your life was before you got into any type of real estate investing.
Yeah, sure. As a practicing radiologist working full time, I was working a lot of hours, so 6 days, sometimes even 7 days. So I was heading towards burnout. I had no time for myself, no time for family. So then I decided, okay, this I need to figure out other ways to line up my passive income instead of trading my time for income all the time. So that's when I cut back my hours. I went to part time. So I'm semi-retired now. I work half time, 1 week on, 1 week off. And then I started looking at real estate. So I bought a small rental house in my area. Then also looked at some syndication, started reading up on real estate, just learning,
Hmm.
listening to, reading blogs, listening to podcasts, talking to different people. So that's been my journey for last 4 years. So I have an active portfolio locally now. I have 16 doors, and I invested passively in about 8 different syndications.
Awesome. So let me go back a little bit. And so you said you were starting to get burned out. So how long do you think at that time that you had been working, 6 days or 7 days or whatever, how many years do you think that was until you kind of reached the point where I've got to do something else?
Yeah, it was, I'm kind of late to the party. I worked for 30 years pretty much full time. And for the most part, it was very, reasonable volume. But as you know, the demands are increasing, the volumes are going up, reimbursements are going down. So I would say for last, 5 years prior to my semi-retired, I was working a lot. So,
So you were working a lot, your income, you're having to probably, see or treat more patients or read more film just to kind of keep the same income level. Is that right?
yeah, that and also just the sheer volume. Sometimes it's not about the income coming in, but it's
Mhm.
more about your time. Like if you're working all the time, then the quality of life goes down. So at that point I decided, I really need to cut back, for my own health and just having time for myself, to do other things that I wanted to pursue. So yeah, real estate, I've always kind of liked real estate. So then I said, well, this would be a good way. And once the first rental check came in the mail, came back from vacation, then the light bulb went off. Okay, this is doable. So then I started buying small multifamily in my area, duplex, triplex, fourplex, and got more seriously involved with it.
Gotcha. So how, when you were on that verge of burnout and you knew that you needed to do something, so what led you to real estate? Like, did you know somebody that was doing real estate? Or I know there's different ways that you could make, quote, passive income, but so why real estate?
I always liked real estate. I always had interest in it, but never, pursued it from an passive income perspective. And one of my acquaintances, she actually came to me and she said, "I have this buyer, and his financing is going to fall through. Do you want to buy this house?" It was a little small two-bedroom house in my area, and I was very hesitant, being a little nervous about, jumping into it. But then I talked to a bunch of people, few of my friends who are in, businesses, and they said, look at the worst case scenario. What would happen? It's not going to go down to zero. If you don't like it, you can always, sell it. Yeah, you may lose some money, but it's worth a try. So
Yeah.
I said, okay, so I bought that house, and then I remember I didn't want anything to do with it, so I gave it to the property manager, and then she took some time to rent it out. So when I remember coming back from vacation, and that rent check was literally in the mail. At that time, they were mailing the checks. So that was my aha moment. I said, wow, this is $800 that I didn't have to work for. It's in my mailbox. So
Nice.
and then I got more serious. I said, yeah, this is very doable. I just have to make some effort, educate myself in this space. And then that's why I started doing more research and, built my little portfolio.
Excellent. So I guess you still have a property manager to this day with your 16 doors?
Actually, I don't.
Okay.
Excuse me. I self-manage it. I wanted to learn the business. So I said, let me just self-manage it because I realized it's not that much work once you put systems into place. And since I've been doing it for a few years,
Hmm.
I'm not handy at all. So I don't do any of the work. So I just delegate, find people to do it. So I have my team, I have my AC guys, I have my plumbing company. So, the tenants would just text me. I would just text the handyman or whoever. They go there, take care of it, and I just pay the bill. So it's been relatively smooth. I've had some hiccups along the way, that's normal,
Sure.
part of, yeah. And my goal was really to learn property
Mhm.
management. So now that I know, now I'm thinking of giving it to a property manager so that I just have to manage the manager because I'm actively looking to invest in mobile home parks,
Okay.
into larger deals.
So so you started off as an active real estate investor. So what led you into doing some passive deals with syndications?
Well, I had some money in my IRA. So I changed some of it to self-directed IRA. I also converted some of my traditional IRA to Roth IRA.
Okay.
So then I knew there were benefits to that. So then I started talking to a lot of syndicators and sponsors, and I started investing passively with them about 4 years ago.
So
That's
was there something, so you just wanted to take some retirement account money and do something with it instead of putting it into more active rentals? Is that correct?
Yeah, for retirement, as you know, for self-directed IRA, there are a lot of restrictions and a lot of prohibited transactions.
Hmm.
So it was better for me to be hands off in that situation and just invest passively. Plus, I like the idea that part of my portfolio is very passive and is generating consistent monthly cash flow for me that's growing in my retirement account. Um, because before this, my IRA was pretty much invested in stock market. So I
Okay.
also want to diversify, go to a different asset class like alternate investment. So that's when I went into passive investing also. And I still believe in both these things because
Hmm.
I do active outside of my IRA, and inside my IRA, I like the passive investment strategy.
Excellent. So at this time, how many deals are you in now?
I've done about eight passive syndications,
Okay.
multifamily, couple of multifamilies. I invested in a mobile home park. I'm in the process of investing in another mobile home park. I've invested in mortgage notes, and also new construction,
Okay.
and done some private lending. So it's kind of a mishmash of everything, but
Mhm.
I like it that way because I don't want to put all my eggs in one basket. So I want to diversify. So I really believe in like different asset classes.
Mhm.
And I'm looking to invest in industrial and then maybe self-storage. That's
And
just to kind of round out the whole real estate gamut.
sure. Awesome. So, and you told me before we started the call that one of the sponsors that you had invested with was Nepali Capital.
Yes, I did. I've been very pleased with them. This was early on, I think 2018.
Okay. What kind of deal was that?
That was a multifamily deal.
Okay.
Uh,
Where was
yeah,
it located?
this was in Carolinas.
Okay. And is it already gone exited?
No, not exited.
Okay.
They're still doing the value add component, trying to increase the net operating income. So it
Okay.
hasn't gone full cycle,
Hmm.
but being very consistent with communication, regular communication and even more communication during COVID because of, uncertain times and, keeping everybody apprised of what's going on at the property level.
Hmm.
And the distributions have been very consistent. So I'm happy about that.
On most of your of the eight, are you mainly seeing quarterly distributions? Is that what you mainly get, or how does that work?
Yeah, majority are quarterly distribution. There's one multifamily, they pay monthly.
Okay.
Yeah.
So what do
Majority.
you think as far as which favorite topic of mine is taxes. So what have you seen, I guess, you know, in when you were practicing full time as a radiologist before real estate, how were your taxes then compared to some of the tax benefits you've gotten since you've started real estate investing?
Yeah, I think there's certainly tax benefits, especially for my active part, with depreciation and all the other accounting things that one, can make use to offset your income. So
Hmm.
that's definitely very beneficial. On the passive side, I'm mostly invested out of my IRA.
Okay.
So I am, foregoing some tax benefits in that because it's in an IRA. But I'm okay with that because that's where my uh, funds are that I can invest passively. Because my taxable account, I want to invest more actively in real estate. So that's
So
strategy.
are you, because you're an active investor too, are you filing for real estate professional status?
Yes, this year I'm going to be filing as real estate
Okay, awesome.
status because I'm
So
self-managing my rentals. Um,
I see more and more doctors that are, well, number one, they're asking, if I invest passively, will that do anything to my active income, the income, earned income from treating patients? And, typically the answer is no, it doesn't affect that, but you do get a lot of the tax benefits, the depreciation that will offset the passive income that's coming in from the syndications. But like you, if you have, a perfect situation would be a husband and wife, where if you have the non-working spouse that could potentially want to get into real estate, maybe become a real estate agent part-time on the side, the benefits to that, to be able to decrease that active income is just tremendous. You probably get more tax benefits than it would, the salary for being a realtor part-time. So that's great that you're going to be able to do that this year, and I'm looking forward to hearing how that's going to affect your income in the long term.
Yeah, yeah. I'm working with CPA who specializes in real estate. So this year, so that's going to be different. And yeah, I agree. I think filing as a real estate professional, if your spouse can do it. I'm single, so it's just me. But then I am devoting so much time to my real estate activities. So yeah, I'm keeping track of all my hours, and I definitely qualify as real estate professional.
Yeah, excellent. Yeah, this is actually the first year that I'm filing as a real estate professional too. So, I'm keeping track of the hours. You can just do it, with apps, and it's not that much to it, as you know. But uh, the IRS states you need to do at least 750 hours, which basically equates to about 15 hours a week. So, so let me ask you this: do you have are you going to have that real estate accountant for your practice too, or are you going to have two separate ones?
I think they can do my practice also
Okay.
because it's just easier to, have everything with one person
Hmm.
rather than having separate accountant because then they can look at, overall financial picture and
Gotcha.
make it more tax efficient.
So for any of the doctors or high income earners that are either listening or watching this, if and they're thinking about potentially getting into real estate, maybe passive real estate, maybe they don't want to be an active real estate investor yet, what would you say to that person?
I would say this is definitely, an asset class that one should get into because it's high returns and it's consistent. Stock market income, is good, but it's up and down, it's volatile, and it's not under your control. So I like the consistent income. Um, yes, it is more risk in the sense that it's not public. Most of these are private equity deals. So there is more due diligence upfront.
Hmm.
But my goal has been to do the work upfront, put in hours, and get to know the sponsor, get to know their track record, talk to their references. So do a thorough due diligence. And once, I'm satisfied, then have maybe 5, 6 sponsors, who are good to work with and who put investors, before their own pocket, and then just keep investing with them.
Is there any resources, maybe just some basic ones that you would recommend that they could access, read, listen to, or whatever if they want to get started in learning more about it?
Yeah, I like listening to podcasts. I listen to Bigger Pockets. I just read the book Hands Off Passive Investor
Brian
by
Burke?
Brian Burke. Yes,
Yeah, that's a good one.
that's a great book. It's a good resource. And I think more importantly, I just like to reach out. Like if I hear somebody on a podcast, I just reach out to them and set up a call and talk to them for 15, 20 minutes. And I think the more you talk to different sponsors, the more you understand what different flavors are there of investing, how their deals are structured. So you just a lot of general education.
Yeah, that's great. One other step that I typically do, but you're right, reaching out to the sponsors, getting to know who you're going to be working with. But I always like to talk to some of the people that have invested with them, and it's a little bit harder now because we're not really meeting a whole lot face to face. But when we could do it, and when we're going to be doing it, going to meetups or going to real estate meetings, conventions, et cetera, and being able to come together, and it's really a lot easier, at that time, because you can talk to somebody over here and, oh yeah, I've invested with that group, and this is what I think about them. And so just keep that in mind. Make sure that, like you said, not only that you get to know the sponsor, but some of the people that that have invested with them.
Yeah, absolutely. And another thing I do is I talk to the references, but I also ask the references if they have referred any other people, and then try to get their contact information. So you're talking to like second degree
Yeah.
references.
Oh, that's a great idea. And
Yeah.
the longer, as you probably can attest to this, the longer that you're in this space, you start to kind of hear the same people's names, going around. Hey, these groups are good. These groups are not so good. So you kind of kind of know. Is that kind of what you found?
Yeah. I think, some names keep popping up if you ask like multiple people. And another thing I do is I ask the sponsors that if they cannot invest in their own deal, which other sponsor they would invest with.
That's a great question.
Then they know, I mean, they have the inside knowledge of their industry. So then, that's another good way. And again, like you said, some names keep popping up. So then
Yeah, that's a great question. So I really appreciate you spending time here on probably your day off, but I really appreciate it. And again, I may reach back out to you after you file for your real estate professional status. I'm really curious to see how much that the taxes on that active income come down. So thanks again.
Yeah, thank you so much, Jeff, for having me. I appreciate the opportunity. Thank you.